Hi friends, I'm Rebecca. Welcome to Squintillions. It has been quiet on my channel for a few weeks now because my video camera was damaged and had to be sent into the shop for repairs. I'm glad to have it back now so I can continue on with my Grow Your Dough Challenge Q2 summary. I'm going to be using my notes a lot today as I have a lot of details for this video and I only have a short time to record it in. For the Grow Your Dough Challenge, I put $1,000 into 6 different investing platforms at the beginning of this year. And we're going to see how those investments do over the course of 12 months and which account can grow the most dough. For more in-depth details on the challenge and to see what my initial investments were, you can look at my first video on the Grow Your Dough Challenge on YouTube or read on my blog at squintillions.com. I'm going to be counting down the financial investments from the least amount of money in the account to the one with the most amount of total money in the account. 5 out of 6 of these accounts started with $1,000 as the initial investment, except for Acorns, which I'll go into more detail in just a moment. Account totals were taken from July 13th, 2019, a Saturday, so I could do it when the markets were closed and everything would be equal. Also, I opened an account with M1 Finance just a few weeks ago and invested $1,000 into it, and I'm going to give a quick update on where that account is right now. Finally, I have budgeted $1,000 to spend on growing my YouTube channel and my 2 blogs, and I'll give my details about that at the very end of the video. Number 6 is Robinhood. My Robinhood account is still down below the initial $1,000 investment due to the investment choices that I made with the account when I opened it. I had tried to mimic the industry percentages of an S&P 500 fund, and I chose companies that represented those industries. A badly timed investment was Kraft Heinz right before their price dropped, and that brought down my account value in Q1, and I ended up selling my 4 shares. To represent the consumer industry and replace Kraft Heinz, I bought 3 shares of Penske Automotive Group, ticker PAG, at $44.65 per share at the beginning of April. That price has been bouncing around right above the buy price for the last month. So I'm glad I made that decision to sell Kraft Heinz and buy Penske. I earned dividends in my Robinhood account from payouts in June, and I built up enough cash in the account that I could buy another stock. I searched for stocks that were under $20 per share, and I decided to buy 1 share of American Eagle, ticker AEO, at $16.40, and that was on July 2nd. The stock is trading near its 52-week low, but I couldn't figure out a specific company reason why it was doing that, especially since their EPS grew by 4% in the last quarter. Anyway, the current value of my Robinhood account is $989.57, which is down 1.04% from when I opened it in early February, but it's doing better than it was doing when I did my Q1 report. If you would like to open an account with Robinhood, please use my Robinhood Refer a Friend link, which is posted in the description below, and you will get a free stock. If you're interested in learning more about Robinhood, please check out my walkthrough video. Number 5 is my Capital One CD. I like to think of this as my Grow Your Dough baseline investing account. My Capital One certificate of deposit, which is earning 2.7% APY. With the interest I've earned so far, the total value of the CD is at $1,011.09. And while Capital One does not have affiliate links for their CDs, I have included a refer a friend link in the description for their money market, savings, or checking accounts. If you use the link, you will get a cash bonus of $25. The crowdsourced real estate investment platform Fundrise is next up on my list, coming in at number 4. The account has been making steady progress, and I'm enjoying the updates on the real estate projects. I recently received a Q2 dividend of $22.87, making the current value of my Fundrise account $1,033.36. If you open an account with Fundrise, you should plan to invest for longer than 1 year, as the real estate projects have lengthy timelines. If you open an account using my Fundrise Refer a Friend link, you will have the 0.15 advisory fees of the account waived for 90 days. Number 3 is Lending Club. Lending Club is another longer-term investment account, as loan lengths are 36 months or 60 months. I plan to stick with the $1,000 invested in this account for a full 5 years, and if it continues to grow the way it has been doing, I will probably invest more money in it after the 12 months of the Grow Your Dough challenge has passed. I have auto reinvestment set up for my dividends, so I don't really even have to think about this account. There was one thing I had to do recently, was that they decided to stop authorizing grade E notes, and so I had to adjust my note allocation last month. I talk about this more in the article I wrote about it called Lending Club Investment Adjusted on the Squintillions website. I'm impressed with how well this account is doing. The total value of my Lending Club account is now at $1,058.89. There is a Refer a Friend bonus for opening new Lending Club accounts, but the requirements are more rigid than some of the other investing platforms, so read the fine print details. You will receive a monetary bonus depending on how much you invest in the account, but the minimum amount you need to invest for the bonus is $5,000. Of course, the link is in the description. Number 2 is ETrade. My ETrade account is the one that most closely reflects my personal investment style. I had selected companies and funds with value that pay dividends and have some potential for growth. I plan to hold all of them for the full year, and I am auto reinvesting the dividends. The total value of my ETrade account has dropped a little bit from its high last quarter and has not quite recovered from the May market dip. It is still healthy with a current value of $1,114.35, displaying a total gain of $90.41 or 8.87%. Number 1 is Acorns. Now, if you watched my Q1 update, you will have seen that Acorns was in last place and now it's in first place. Let me explain. Acorns is an incremental savings and investing platform. Instead of putting $1,000 in at the beginning of the year, I deposited $400 in the account. Then I began adding $50 per month starting at the end of February, so that I will have purposely deposited $1,000 in the 12-month span of the challenge. The next largest portion of money in Acorns comes from roundups to the next dollar on items that I have purchased using my credit card or through transactions from my bank account. I've also used a 2x multiplier to double each of the roundups. I have been using my credit card more often for purchases instead of using cash since I got a Cash Rewards credit card from Bank of America. This means that a greater number of roundups are being added into my Acorns account than they were in Q1. I also want to highlight that when you use your bank account as a debit account to pay for something, or to write checks, or to make a transfer, to another account, such as external savings account. Roundups are also pulled out and transferred to Acorns on those types of transactions. There is the ability to turn off the roundups coming from your bank account, but since I started with it on, I'm gonna continue to have it on through the rest of the challenge. In the second quarter, my Acorns account has grown to a total of $1,118.92, and it moves into first place on the list. I have purposely deposited $650 of that amount. The remainder of the increase is from the 2x roundups being saved, appreciation of my moderate level investment portfolio, and the payment and reinvestment of dividends. The market gain on the account is 5.44%, or when you subtract out the fees, Acorns charges $1 per month to maintain the account. Then the total gain is 4.97%. If you feel like this automatic way of saving money is beneficial to you and you'd like to open an Acorns account, please use my Acorns Refer a Friend link so that we will both get $5 in our accounts. Of course, the link is in the description. And now for my M1 Finance update. I'd been hearing so much about M1 Finance that I decided to open my own account. And I described that in my most recent YouTube video. After only a few weeks, the $1,000 I had invested in this account has now reached a total of $1,062.11, and the return is shown at 6.54%. This is mostly thanks to buying Nvidia during a dip and to Disney stock appreciation as it keeps climbing upward during the summer blockbuster season. If I were to insert the M1 Finance account into my list of the Grow Your Dough account rankings, then the M1 Finance account will be at position 2.5. M1 Finance has created a special referral bonus for the month of July. If you open and fund your account using the referral link in the description, we will each receive $20 in our accounts, which is twice the normal bonus. And finally, the Me and My Blog section of this video, I've dedicated $1,000 to growing my blogs and my YouTube channel over the next year and making improvements to the content. And that is here at Squintillions and at my music blog at You Make My World Rock. After attending the WordPress conference WordCamp at the end of April, I learned that I needed to switch my blogs from WordPress.com to WordPress.org in order to get the most benefit out of the blogging platform. I began to use Bluehost as my service provider, and the cost to get that set up and to extend the ownerships on my two domains was $238.26. I learned so much from the WordCamp sessions that I've decided to attend another WordCamp during my upcoming summer vacation. The upfront cost for that is a $50 conference fee. A new expense has been setting up ConvertKit for both of my blogs at $29 per month, though I'm not sure I will be continuing with it if my subscriber numbers don't improve. My current total spending for blogs and YouTube and related personal development for 2019 is $745.18. Yes, there are costs involved in trying to create a professional blog. So far, I'm not seeing any income to diminish these costs, and it seems like I will need to create a product to sell rather than try to rely on affiliate income in order to help cover my costs. The next step is to increase visibility on my websites as they are not getting enough traffic. Well, that's the update on all that I'm doing as part of the Grow Your Dough Challenge. If you enjoyed this video, please hit the like button and remember to subscribe for more content on personal finance and personal growth here on Squintillions.